Let me tell you about a $4 cup of coffee. Not because of the coffee, but because of what that $4 did. You set up an automatic payment, a subscription you forgot about, and one morning, without warning, your account dips $4 into the negative. $4. Less than a fast food meal. By the time you check your phone, the bank has already made their move. $35. Gone. Not as a warning, not as a courtesy call. Just gone. A fee. Automated. Instant. Final. And here's the thing nobody talks about. That $35 fee. It didn't come from a place of cruelty. It came from something far more unsettling than cruelty. It came from indifference. Your bank didn't punish you. Your bank didn't even see you. You were a number that crossed a threshold, and the system responded the way it was designed to respond. Mechanically, efficiently, without blinking. And that raises a question that has bothered me for a long time. At what point does your bank actually start respecting you? Because I can tell you right now, it is not at zero. It is not at $200. And depending on where you are financially, it might not be anywhere close to where you think. Today we are going inside the system. 8 levels, from a negative balance all the way to $25 million. And I am going to show you exactly how the bank sees you. And more importantly, when that view finally changes. We start at the bottom. And the bottom is not just zero. It is below zero. You are in the negative. A forgotten subscription charge, $7, maybe $8, tips you over the edge. The overdraft fee hits immediately. $35 on top of a $4 purchase. The math is almost poetic in how punishing it is. But it doesn't stop there. Because now a second charge comes through. Another small subscription. Another one you forgot. And the bank doesn't care that you forgot. Another $35 fee. Now you owe $77 in fees alone, and your rent payment just bounced. Your phone bill is next. What started as a $4 coffee has become a $200 hole by the end of the week. So you call customer service. You wait on hold. You explain the situation, calmly, reasonably, and the person on the other end reads from a script that might as well be carved in stone. I'm sorry, but we're unable to reverse those fees at this time. A manager callback is promised. It never comes. You go into the branch, and this is where it gets personal. Because there is a moment, a very specific, very quiet moment, when the teller's expression shifts. You smile. They do not smile back the way they smiled at the person before you. They process your transaction in under a minute. 40 seconds, maybe. Efficient. Professional. Cold. At this level, you are not a customer. You are a liability. A risk score with a face. And the bank is not being cruel. They simply have not been designed to care about you yet. You work overtime. Real overtime. 20 extra hours in a week you will never get back. You climb out of the negative. You hit $200 positive, and you exhale for the first time in weeks. And then the maintenance fee hits. Quietly. Automatically. $12 to $15, depending on your institution, because you do not meet the minimum balance requirement. There was no phone call, no heads up, just a line item on your statement that says, "You are not quite enough yet." You decide to apply for a credit card. You think, a credit card will help me build my score, create a cushion, give me options. The bank agrees to help. Sort of. They offer you a secured card, which means you hand them $300 of your own money, and they lend it back to you at a 24% interest rate. Read that sentence again, slowly. You give them $300. They hold it, and they charge you 24% to borrow your own money back. The branch teller is friendly. They are always friendly. But there is a version of friendly that is warm, that sees you as a person, and there is a version of friendly that is professional, that sees you as a transaction. At $200, you are getting the second version. Every time, You exist on the bank's books, but you do not exist in their attention. Something shifts here. It is not dramatic. It is not a red carpet moment, but it is real. You have a steady job now. Direct deposits every 2 weeks, consistent, predictable, reliable. And consistency is a language banks understand. Your maintenance fees quietly disappear, not because anyone called you, not because anyone celebrated your progress, but because your direct deposit pattern crossed an invisible threshold in their system, and the algorithm made a decision. Credit card offers start arriving in the mail. Real ones, metallic ink envelopes, pre-approval letters, limits of $2,000 with a 92-second application process. 6 months ago, you were being offered secured cards. Now you are pre-approved for actual credit. You need a loan for a car repair, an unavoidable one. You apply. You are approved in the same conversation. $5,000 at an 11% interest rate. Now here is the important thing to understand about this level. The bank is not warming up to you. They are categorizing you. You have moved from liability to opportunity. You are now a profile they can sell products to. That is not a relationship. It is a reclassification. But it's a start. This is the level where things stop feeling accidental and start feeling intentional. On the bank's part, not yours. One day, without warning, without a request, your credit limit jumps. It goes from $4,000 to $9,500. Nobody asked you if you wanted that. They just did it. Because your risk profile improved and higher credit limits serve you. But they also serve them. Because now you are more likely to carry a balance, spend more, stay longer. You get a call from someone at the bank, not a customer service rep, a relationship banker. They introduce themselves. They want to schedule a conversation about your financial goals, your goals, not their products, your goals. The language has shifted entirely. You need an auto loan. This time, the rate is 6.8%, down from the 11% you were quoted before. Not because you negotiated, because your number went up and the system automatically assigned you cheaper money. A mysterious $32 fee shows up on your statement. You email your banker. Within a few hours, it is reversed. No phone tree, no hold music, no scripted rejection. Just done. And here is the realization that hits hardest at this level. The system was never out to get you. It was never personal. It was just indifferent. And indifference, when you are struggling, feels like cruelty. But it was never cruelty. It was math. That is somehow both a relief and the most infuriating thing you have ever heard. You get a new statement, and on it, for the first time, you see a label you have never seen attached to your name before. Preferred client. It appears on your statements, on your login portal, in the subject line of emails from your bank. It is a classification, yes. But it is also a signal, to you and to every person in that branch, that your category has changed. Your banker calls you proactively now, not to sell you something, to check in. They remember things. They remember you mentioned a sibling in another city. They remember your birthday. They remember the goal you mentioned 8 months ago. Is this personal, or is this strategy? The honest answer is both. But it does not matter, because the result is the same. Someone at your bank is paying attention to you in a way that is real, and it changes the experience of being a customer entirely. You walk into a branch and someone greets you by name before you reach the counter. The velvet rope does not apply to you. You are walked directly to an office. Competitors are calling. Other banks are reaching out, offering to match rates, offering to beat your current deal. When your banker finds out, your bank responds within days with a counteroffer. They are not willing to lose you. You have gone from invisible to contested. And that change, from invisible to contested, is one of the most significant transitions in this entire story. The geography of your banking relationship has flipped. You no longer go to the bank comes to you. A wealth manager drives to your office. They bring printed reports, not digital, not emailed. Physical, leather-bound documents with your name on the cover, outlining your portfolio performance, your tax exposure, your estate position. The conversation is no longer about products. It is about strategy, tax structures, estate planning, generational wealth. The kind of topics that, 6 years ago, felt like they existed in a different universe entirely. When you call with a problem, a wire transfer that has been frozen, an account issue that would have taken 3 business days before, the phone is answered on the second ring. The issue is resolved before you hang up. No script, no escalation, no ticket number. You get invited to a private dinner, top floor of a building downtown, city view, small group. The bank is hosting. And the interesting thing about this dinner is not the food or the view. It is that money is not the topic of conversation. Money is the assumed foundation. The conversation is about other things entirely: markets, travel, philanthropy, legacy. At $500,000, money stops being the subject. It becomes the backdrop. There is a specific moment that defines private banking, and it is this. The rules stop being applied to you and start being negotiated with you. Your private banker manages fewer than 20 accounts, total, across their entire book of business, which means when you call, they know your voice, they know your family, they know your foundation, your goals, your timeline, not because they reviewed a file, but because they have been inside your financial life long enough to carry it in their memory. Mortgage rates for someone at this level are not set by posted rates. They are negotiated from scratch, based on the totality of your relationship with the institution. Investment minimums that apply to every other client are routinely waived for you, quietly, without fanfare. You walk into any branch in the country, one you have never been to before, in a city you are visiting for the first time, and your presence is flagged before you sign a single document. The branch manager comes to greet you personally. At $5 million, the bank does not just know your name, the bank knows your world. This is where the power dynamic completes its full reversal. At the beginning, you were a risk score, a number, a threshold crossed. At $25 million, you are a line item in an executive's performance review. Losing your business is not an inconvenience. It is a career event. The institution organizes itself around keeping you satisfied in a way that has no equivalent at any other level. Deals do not come to you after they go public. Deals come to you before they exist. You are consulted on emerging market positions before those positions are finalized. You are given access to investment structures that are written from scratch. Terms, timelines, and conditions designed specifically for your participation. The chief investment officer flies out to ask your opinion. The head of private banking is on a first-name basis with your assistant. The bank is not serving you. The bank is partnering with you. And the distinction matters because partnerships carry mutual accountability in a way that service relationships never do. At $25 million, you are not using the bank. You and the bank are using each other. And both sides know it. Now, let us go back to the beginning. A $4 coffee, a forgotten subscription, a $35 overdraft fee, a person on hold waiting for a manager who will never call back, rehearsing an explanation for why the fees should be reversed, an explanation that will not matter. That person is not in a broken system. That person is in a system that is working exactly as it was designed to work. The bank did not build 8 different levels of service because they are cruel. They built 8 different levels of service because they are rational. Risk, reward, and revenue, those are the only variables in the equation. And the size of your balance determines which side of each variable you land on. That is the uncomfortable truth at the center of all of this. The question we started with was, at what point does your bank actually start respecting you? And the honest answer is, it depends on how you define respect. If respect means being seen, truly seen as a person with context and circumstance and a reason for that negative balance, then for most people, that never fully happens inside a bank at all. But if respect means being valued, being fought for, called proactively, given access to cheaper money and faster resolutions and rooms with city views, then the answer is somewhere around $15,000. That is where the shift becomes real. That is where the system stops processing you and starts protecting you. The system is not broken. The system is a mirror. And what it reflects back to you has everything to do with the number sitting next to your name. The question is, what are you going to do about that number?